Hey everybody, this is DayTraderRockStar, and I want to wish you a happy and healthy new year and a very successful one trading. I am going to be putting out a series of videos here, just kind of commemorating the end of the year and review and looking forward and a great watch list for 2023 and the watch list for next week and what we all do here at Day Trading Radio. And you might be seeing this video for the first time and not knowing where the site is, so I'm just going to introduce myself. I'm Day Trader Rockstar John Carisco. I've been a full-time trader for a long time and been running Day Trading Radio since 2007, broadcasting the markets every day. And we do that every day at DayTraderRadio.com. So to get that out of the way, feel free to visit us and watch the show and watch the trading. And that's what we do. As members of the site, you know, we all gather every morning. And for me, as a professional trader, we you know, our day is basically the day that the market's open. That's what we do. Sit in front of a computer each morning, get in pretty early, and I'm going to explain, you know, if you were a trader or wanted to aspire to be a trader, what your typical day might look like. You know, the first part of this video is basically just discussing what type of market we just came out of and how hard it was, you know, as to be just a longer term investor. But as we noticed, you know, further and further into this, and even as we close out the year, we've really changed our type of trading to long-term investing and swing trading to more short-term investing and scalping. And that's important, and that's what we've been focused on. And I know that's kind of some people want, you know, come to the site to get the HPS setups, which are the high probability setups, which are basically trades that you're going to take for 7 to 14 to 20 days. You know, nice swing trades that are based off of stochastic rotations and divergences and on the daily time frame and on the weekly time frame. And that's all good, but when you don't have that, you can't force that down people's, you know, say, all right, I want to give you something, but I continue to say, you know, markets are going against us. We don't want to be buying into the pullback, so we kind of push off the watch list a little. Say we're not going to concentrate on the longer term things yet. We're going to let the market flush itself out and then pick up some bargains. And during that time, when we're doing that, we're concentrating on the smaller movers, the faster movers. And then between that, we have the futures. And so I said, you know, this would be a good video to kind of talk about the different type of trades we take here at Day Trading Radio and what a trader's goal is. It gets overwhelming if you're a new trader and you come onto the site and you see everyone trading. There's options and stocks and futures and scalps, and you might be trading under a pattern day trading rule, which is very difficult conditions to trade, sometimes, you know, intraday and waiting for good setups and then selling and burning these trades. So, you know, it's important to get the right stocks at the right time. It's not an easy thing, but the path that I want to show you makes it much easier. And the team and the group of traders that you trade with, because here at Day Trading Radio, I consider these traders my fellow, you know, friends, family, you know, trading team. We're a business and we work on making money, and we try to, you know, identify the setups. We have all kinds of input, lots of stocks coming from the chat rooms. I bring them up on the screen. We go over them real fast and we decide if we're going to take them. And that's been the you know, the type of trading we've been doing, I would say, over the last couple months at least. And for the year, and I'm not going to go through all the stats, the year has been down on the S&P. I think it's just under 20% overall. The NASDAQ, big drop. Everything just got crushed. So it was better to be a short-term scalper and trade the intraday moves versus holding something. Now, going into 2023, and we're not going to go through the whole reason this is. I go through this every week with our watch list video. We know it has to do with interest rates, the inflation, the possible recession, the war. All right, these are the top items out there that are kind of pressuring this market. Energy prices coming, you know, it's just, there's a lot to deal with at this point and a lot to get through, and mostly about inflation and interest rates. And this has to play out. It really does. We're at a junction in the market right now, which I would say 70% of the talking heads out there are expecting lower prices, maybe even 80%, you know. And I think a lot of people want that. And I wouldn't mind it either. You know, technically, as an older trader, an old-time trader, you use the term capitulation a lot back in the day, and that was always a good sign. And I haven't seen it, and it's harder to, look at the last good capitulation. I mean, the flash crash was definitely a capitulation. 2008, there's such nice moves down the bottom here at the Corona low at 2020 probably was a little capitulation. And it's a volume spike, the VIX spiking. We're not seeing any of that right now. And that would be a clean signal to really, start saying, all right, we could start to look more on swing trades and stuff. But until then, until we get a definite signal, and we're going to talk about those signals over the next 3 videos I'm going to put out over the weekend. One will be a technical look at this market. But the last 4 or 5 days, you can see we've been just chopping sideways here. And no real direction here. We need to break a little bit higher to get going back up to here, or do we break down and retest the recent lows? We're right dead in the middle, and there's a lot of traffic here. So it's up in the air going into the first of the year. We're getting closer to the end. Technically, and I want to just, again, that's for another video. But let's talk about how we make money each day coming to Day Trading Radio. So in the morning we're going to get here. If you're out there and you're free, get here around 7:30, 7:30 to 8. You can get here early. Remember, our pre-market trades or pre-market trading opens up for people. You could be trading at 4 o'clock in the morning if you have the right broker and stuff. And a lot of people don't have that right broker, and it's kind of it's funny because we could profit off of that, and we do profit off of that in the morning when we know that new brokers are opening up and more orders flowing into the market, and we look at things that are holding up pretty good. I have a little thing here, and this is sitting in front of this. So we look at 4 o'clock to 8:30 as our pre-market momentum trade area. But a lot of that, like I said, I could break this down to 7:30 to about 8:30, 9 o'clock. And that's when we get our momentum, our short-term poppers. I want to go over those and just show you an example of those and what that requires from you. First thing we'll discuss is my process of finding what we call and I can see it on my watch list here. I have it called, where is it here? Actually, it's over here. I have it floating. I'm using TC2000 for most of my scans when it comes to looking for my short-term low-float poppers. Low-float poppers come out with news early in the morning. They're usually cheaper stocks usually under $5. All right, so I put this, again, the software is TC2000. No type of endorsement or anything, but that's the one I use. I've used it a while, and that's the white chart you usually see during the day when I'm analyzing individual stocks or the S&P cash. I'll run a scan here, and it's called my low float flyers, but I call it the low float poppers. And basically, it is. I'll show you I'm going to show you what I'm looking for. I'm looking for price history or the price to be under $5, the float to be under 10 million. I think that might actually be a million here. But the float, latest float, doesn't really work too well on the TC2000 because I'm getting bigger floats. But again, it's giving me good results, so I just keep it there. And then there's a formula for price moving up. So if you're using these indicators, you'll see these. And then the latest float, again, there's the float, price moving up. And it'll move it up 30% or more. So like I said today, if you actually listened to the show today, I said these only pop up if they've already got a 30% move. Now, the stocks that we're looking for in the morning are low price, under $5, that tend to have some type of news behind it, where momentum traders are getting on it, and they usually have a low float, which could move it real aggressively. And the momentum traders, and in the morning pre-market, you can't really halt these things either. So this is an example of the stocks that came back today. This is actually aftermarkets. This is constantly updating. So when I bring up a chart and say, all right, Pally's on the move, or Sound, a lot of these stocks will come and go throughout the day. So, and I look at these on the 5-minute time frame, just a short time frame. It could be the 1 minute, 5 minute. The object here basically is there's not much here other than a couple things you need to do. You need to be first. You need to be there when the news is there, because when you have good news, you tend to get that follow through. So every time you see a stock on my site and we're looking at it, if I even catch it later, I'll always mark down where I first noticed it, for my own personal look back, and I can say, well, we brought this to you here. It was a few minutes after it got a big move, but overall the rest of the day went like that. So looking at stocks like that, what I'm going to do is I'm just going to run through, and I run through these, and new ones pop up. Let me move this over here. So, and then, there we go. So I'll just go down the line here. And some of these won't be moving. Easy, Geo, you can see the circle back during the day. And I'm watching for these constantly, because these are momentum trades. We want to be in and out. These are not great for pattern day traders, because you really don't want to be holding these more than a day. Very rarely. On some occasions you will. On some occasions, but those are the real short squeezes, and those, and these things take off into a price that's unbelievable, and it stays up there, and then you could take that shot. But again, these are all higher risk in a way that there's really just news and momentum and buyers, and when the buyers disappear, it's like musical chairs. Music stops, you better be sitting down, because these things come back pretty fast. So always, we get in early, we get out pretty fast, and you wait for the next one. And what's great is you pretty much have defined risk, because they're pretty cheap and they give you great returns. Like I said, they started getting on my radar at 30% up. And after that, they could really start to move. So these are really explosive stocks. And again, as a trader, that's what you want to be. You want to go where the fish are biting. You want to go whatever analogy it takes, but you got to go where the money is. All right, the money is in these stocks, and these are typically pre-market stocks too. In this case, this one came out with news during the day, but a lot of these things will be pre-market movers too. I'll probably show you some more examples, and then the market opens up at 9:30. When the market opens up at 9:30, we kind of go into mode where we're looking for at the MES, or the micro contracts futures, and this is this chart here. And this is the quote tracker, and I love this. I highly recommend this and endorse it. My endorsement. Really good program. It attaches to your brokers. Connects it very easy, plug and play. It's affordable. It's not great, and it's and I have the template. So anybody who's a member, I have the template. If you want to set up your charts just like my charts, that's available on the site. So at the beginning of the day, and again, these small charts that you see here are the ones that are typically moving, like Cala today. I mean, the moves that these things make. It took off this morning around $30. It went over $40, back down to 30 and change, back up to 40 and change. I mean, these are really big movers. Pally, big move this morning from $4 to $8, 100% move, then back down to 4. So you want to get in early, and you want to get out, and you really don't want to play the games over and over again. This is something for me. I want to find these early. That's why I'm in early. Typically, these things start to move pre-market. After the open, then we could kind of follow them. If they do come back and take out the highs, then they're, we're usually, you could trade them at that point. And there's techniques that you learn throughout, doing this. Here's the SONX. I might have just talked about it, but then I realized my thing was muted there for a second. And this is one that we're looking for a breakout. And this is one that I got in early. And early meaning before the crowd got in. We noticed it yesterday on lighter volume. And anytime you do have a little big candle that's approaching a previous, and you have that momentum, we get through that high. It's kind of a blue sky type of trade where it could go anywhere. But like I said before, when I think it was muted, I just want to get one more pop and a breakout, and I would take this off anyway in the mid 3s to 4 if we got up there, maybe even earlier. We're already in a profitable trade on this, and that's the type of trades we're doing: in and out, in and out, in and out, and that happens early in the morning, typically up to about 9:30, and then those stocks will still play out early in the morning. There will be, depending on the day and where the what the market looks like, these will pop up all day. But I'm also going to be looking at the futures now. Now the futures today, the MES, the micro contracts, I like to trade those on divergences, sometimes on triple stochastic, quad, using the proper techniques. I want to prove the methodology live and taking trades. And when I do that, I try to do that as much as I can using the micro contracts. I don't have to put a lot on, and I don't have to, with the concept of the show and jumping around and reading the text in the chat room and bringing up stocks. When you get into a trade, you're laser sharp and kind of quiet and stuff. So I tend to take, positions, little small positions, less stress, tight stops, but we're only, really trying to take the methodology trades just to prove them out. And we could go back and say, all right, this is why we got into this one, or this is why we got into this one. So let's take a look back here today. This is my micro futures today. And we go back, and the first one here I took was basically a divergence. And that's what I'm trading. So during the day, anytime we get a divergence, we could switch over. And then these are much better opportunities for traders who, kind of fall into that pattern day trading rule. Because with margin, with futures trading, you don't have those pattern day trading rules. You could trade all day, in and out, in and out, in and out. And that's great. So it's a great tool to have. I recommend everyone to open up a futures account. Open up a discounted margin, discounted broker, like Ninja Trader, or the Apex, or some other ones. Infinity. Just make sure you get good margins. Commissions are pretty much comparable, and it's not too crazy anymore these days. But the setups are there. So when we do take these setups, you have to be ready to pull the pistol and take the shot. So that's why we're here. Divergence, high or low, pretty much a double bottom right here. And I spotted that. And it was a little late on that spot, and we just let it work out. And what's the first rule on a divergence? First rule is take the majority of your profits off on your first rotation. First rotation is your 9-3 rotation. That's what I did. We got up there fast, and I just took it off. And most likely that's the right move to do, because that's what that is telling us. Momentum is peaking out short term. The bigger pattern is down, so this is a little bounce in a bigger pattern to the downside. And that's what you have to overall think. What's the bigger pattern? What's the bigger directional move? And that's how you trade that. You can't just say, I hope this is the bottom. This is going to be the bottom. I want to hold on to it. Take it off, because the bottom will show itself. And when the bottom shows itself, it'll be, And so that was a trade fast. And then the market opened up. And that was a kind of an interesting open, because I expected a pop. And it was kind of choppy here. And we did get a small little pop here, and then kind of rolled right over. And this was showing up as a divergence, but the range was so, wicked. The big wicks here. There's a divergence, and it came down, and then it took out my stop, and then it ran right back up, and it ran pretty good. That was like a 10-point run from 40 to 52. That's a 10-point move right in the first few minutes of the day, so it was kind of whippy. And then we let things settle in. The market started to sell off. And again, looking at individual stocks during the day and doing the commentary and everything else that comes with the show, sometimes we do miss a few of these. I like to review them. But, if I show you a divergence, or you show me a divergence, and I teach you what a divergence looks like right here, right? And I'm not going to go into a whole detailed thing about divergences, but just in case you might be out there for the first time, this is very important to know when trading with us. And that's what you will be taught, are divergences. You'll be taught the divergence style method of trading. And there's rules, and this whole thing is my rule book that I'm kind of referencing right now, and that's available right now. But we're looking at the divergences, the momentum here, and I always love this rocket example. I just love the rocket example. George Lane saying the stochastics measures momentum, and you have to apply it to a stock as the rocket, and the internal momentum, which you can't really read the way the stochastic formula is set up. You're going back 9 or 14 or 40 candles, and you're taking the averages and you're plotting those on a plot between 0 and 100. And if you start to see that start to turn over and start to come down, it's plotting it. Even though the rocket's going up, that means momentum has shifted first. But if the momentum dies out, the rocket, it continues to fly because it has momentum, and then it eventually turns over. So when you have a stochastic divergence, that's exactly what's happening. Momentum is dying out, stock's going up a little bit further, and then starting to roll over. And the same thing on the downside. Momentum here turns up, stock goes down a little bit further, but eventually catches up with the momentum and it turns, and that's our buy side divergence. So that's what we're looking for. It's a fantastic, absolutely scientific, perfect, best setup out there. If you learn it, you can apply it to your type of trading. So that's what I'm always trying to identify. And throughout the day, we are looking for those. In some cases, we might not take, like here, I would have probably maybe mentioned this one. I have to take a look at my other chart because this is on my Interactive Broker Ninja chart, but I'm just pointing it out because I can start to see this divergence right here. And again, the angle, the divergence, the higher high, and you can see the directional move here for now. I mean, and I think I did take that trade. Didn't I take that? No, I didn't. That would have been on there. But that was a nice divergence, right? You could easily see that divergence. You easily see that. Here's another quick little divergence right here in this pullback. And this is something that my job is to identify and say, hey, this is a nice buy side divergence. Watch for the pullback in a kind of an upward trend here. That candle is a reversal candle. It's a higher low versus the stochastic rotation and the price level changing. And you get that bias to the upside. And again, what do? We take that bias to the upside. It comes out of there and then starts pulling back. Again, short-term scalpers, you want to start taking profits on the first rotation and then kind of keep that break-even stop just underneath it in case you get a runaway. But most likely, in this case, the market here was down and we were running into a lot of overhead pressure. Most likely, you're going to turn over. So my recommendation is to sell every time you get overbought. No questions asked. You'll be safe either way. You'll be profitable and safe, or break even and safe, or you'll be safe. Every time you sell that overbought 9.3 in the buy situation, you will be safe. Market here sells off here at 130, and this is what we call the second important thing. We call this a rotation play. This is 3 stochastics, but on my other charts, if we go back to that videotape here. Hope I'm not going too deep into this. This turnover right here, you can see how all 4 stochastics were kind of just drifting down here, drifting down, and they all want to get underneath that last line here at the same time. So you want to almost put a line here. This is underneath the 20 line. This is underneath the 20 line right here. This is underneath the 20 line right here. And you kind of, if you had this imaginary line, and this is underneath the 20 line right here. So all the way up here. And that's where you want to buy that. You want to buy that scenario playing out. It's called a quad rotation. It's our second best setup of the trade. And again, I think I did definitely take the quad rotation. And, and we called the bottom there. Once again, we called the bottom with a trade. I took it off on the first rotation. It got up a little bit further, pulled back, and then I did believe it pulled all the way back down, almost took out the lows. We did the right thing. We come back here. It's choppy. I picked up my calls right here, going into 3 o'clock. I liked the base here. We were very close to the lows. Something smelled a little fishy here, and I ended up buying the SPY calls. And as we can see, they were up like almost $300 after this little rally, $250, I believe. And look at that rally that took. Now, it just you can't do much about that other than just ride it and be happy about it, because this is the end of the year, and it was kind of and we can see where we closed off. Maybe Tuesday we gap up, but I don't want to get off track. That's what we do during the day. We trade for these divergences and the rotation. And the important thing is not to overtrade. And this kind of keeps you from overtrading. Overtrading is the worst thing a trader could do. Because there's only certain good times in the market. All right? You know, the great times to trade in the market are, you know, a strong trend and a pullback into the trend. You want to always have the best price. So if you miss something, you have to wait for the pullback. And these pullbacks tend to give you that divergence. See, look at that divergence. See the low and the lower low and the higher low here? I didn't even mark that one off. That was a beautiful divergence. That was a beautiful flag. The embedded, the 60-10 here is embedded above 80. That sets us up for a bull flag. If I ran the bull flag script on this, it would show a bull flag right there too. So awesome setups. That's what you're looking forward to. And then the third type of trade, you know, that we're looking at, and you know, and again, short-term poppers, futures trading. Now we're always kind of looking for position trades, and they're not as you know, many I want to take in this environment. And we're going to talk more about the, you know, technical look on the markets in the next video. You know, sometimes I go off and I'm very passionate about trading because I feel like, you know, I see the matrix with these MES trades and the futures trades and the divergences. And I've been doing this so long, you start to see these things. But the toughest part of it is pulling the trigger, even though you're seeing it. And, you know, and being human and understanding some of my weaknesses when it comes to trading, or my lack, you know, my lack of discipline in some cases. You know, we all have that, and we're always trying to conquer that, and continually showing you the setups to build the confidence to just kind of give you that little edge to help you take these positions once they're there, because we're here to make some money, right? And it was just like anywhere else. Anything you go into, whatever you're passionate about and you want to do good at it, you do it the right way. Right? You study it, you plan it, you know every angle of it. You don't go, and I always, you know, again, poker, I think gambling is kind of a good example of, you know, similar game theory and waiting for your cards to be played before you start betting type of thing, you know, especially in poker and blackjack. You know, these are all, you know, things that work to be successful. If you're a card counter, you bet when you have the better, you know, cards in the deck that are coming your way. Same thing here. You know, the momentum has shifted. We already got a special little indicator here that's telling us, you know, 9 times out of 10, 8 times out of 10 success rate of identifying the move. Now the object is to get in. Maybe you get in here and you're not in. And you have your target up here, and you kind of miss that by a tick or something. These little things are going to be hard, but the majority of the time, if you get a divergence, you're going to get a move in the direction of the divergence. How fast you identify that, it's almost how fast you can come around with your swing in a baseball, you know, with a 90-mile-per-hour fastball coming at you. You got to take that bat, and you got to swing. You got to take that shot when you see it. Divergence, reversal, boom, I'm in. Get the move, I'm out. Wait for the next one. No stress. Oh, look at this. Candle down. Boom. Divergence. In. See, this might be a little tougher one because it doesn't go and then it kind of pulls back. What if you got in here and eventually pulled back here and you're like, uh-oh, we'll take, you know, there will be times where your entries, even though this seems to have grinded back up further, that was a good trade either way. You got to watch for those. And I see these divergences, and this is something I want to, you know, promise to you going forward as in my resolution is to be a better more active trader and not miss these, because this is, you know, when we go back and we look at them, they're obvious. You know, a lot of them are obvious. A lot of them don't move. You know, if you have a strong trending market to the wrong direction of the trade, identify that and say, hey, John, look, the market's down 52. It feels like crap out there. Why, you know, that long, you better just, you know, keep a tight leash on it. This is not, you know, not guessing where you're catching the bottom here. But you're getting a divergence, you could take it, but instead of looking for 8 ticks or 10 ticks or whatever, maybe you're looking for 4 ticks. Maybe you're just going to kind of scalp that and just take it because you have the signal and you got in a good signal. That's why you have to have your candlestick counter. the candlestick counter is one of my favorite indicators. You can't see it because it's off right now. But it tells you if you have a good candle with a big tail, even like a little relative divergence here. If you see this price come back down, but a higher rotation starts to happen on all of these. And this is starting, I remember this move, and we started taking off 3 o'clock. I was watching this. I took this trade right here. I took this trade. And it was one of the best setups of the day. So happy about that one. So that's 2 money-making ways during the day that we're going to be focused on going into the new year. Both of them, I think, are pretty easy to make money with. I think we get a little distracted, maybe too much. Sometimes we just don't take the right ones. I still think it's dangerous on the low flow poppers. Sometimes I think it's a little dangerous. So the first criteria for me is tangible news, something that's really tangible. And I like to see the volume and the strength. And we read the stocks really well, especially in the morning off the 20-period moving average. And there's a lot of things that we have to just kind of gauge as things are happening. And again, this happens early in the morning, so the earlier you get in, the better. Mr. Land's usually on, bringing you the early morning news. He's on it pretty early, so it's a good, on your dashboard you have all those indicators. All right, and the last type of trading we like to do is looking for those maybe overnight, daily swing trades. Again, still kind of bearish out there. Can't help to be a little bit more bearish at this point. It seems like the whole world is bearish on the markets, and it's hard to believe that we can get through that. So taking what we get a short term is the best bet right now, instead of trying to guess if this is the bottom or not. The next video, one of the next 2 videos out there, we'll be talking about the stocks for next year and which ones we're going to focus on. But I'd like to put out a little watch list on what we could see, short-term moves, potential short-term moves, follow-through days, like the SONX we just talked about. So I wanted to mention a couple that we got today. This is a cheap one. Steve from Texas, one of our members, brought this one into the room. And at the time, when he brought it in, it was just lagging, but I see it moved at the end of the day. Nice. But this is, Steve brought us AUPH, which made a lot of people a lot of money. It went from 5 to 25. That one special Thanksgiving vacation, I was out in Hawaii. And anyway, he brought us this one. He likes it a lot. I like it because it's the divergence. This divergence is killer. It's a key killer divergence. Said in a good way. People don't get upset about that. He said killer. Oh my God. We had a divergence back here in CMMB. Holding on to that one. And that had a nice rip out of the divergence. And we took most of the profits here, held on to a little, and now we're continuing to hold on, and now we're pushing. But the one we just talked about right now is brand new. It's coming out of a beautiful divergence. It looks really good. Look at the steepness of the divergence. Rule number 1, what's the most important aspect of a divergence? Usually the steepness of it, the steepness between the low and the higher low. That angle right there, it's a degree. This is probably like 45 degrees right now. That's a real steep degree. I usually look for them over 10 degrees. 45 is pretty steep, and that's an aggressive turn back up, and everything about this looks great. So I really like it. Put it on your watch list. Yeah. I think I was going to get into that. I was trying to get into something today, and one of my computers was like just acting up on me. Let's go to the next one here. Well, we're watching that Pally today. That was a great trade. Not to say that we're going to get some follow through next week, but we got a gap down here on it. We're looking at it here. We actually showed it to you yesterday. It started moving, and this is one of the short-term poppers. You can see the pre-market. It moved up to about 7 o'clock, then it really popped, and 8 o'clock, then it popped. And I didn't get in it, and I'm watching at the time, and all of a sudden it drops, and we pick it up here about 420. And, they dropped it on an offering, and it ran right back up, and we took profits, and it was a great a perfect setup, and it's pulled back since. But again, you had to be in there before 9:30 to take advantage of that. Sometimes you got to put the time in. Now, of course, all these go out as much as, as fast as I could type them. They go out as an instantaneous alert, and you could get your alerts. For the new people on the trial there, just make sure you could get your alerts. Let me show you something right here fast. I'm signing in. I just remember to forget most important thing. End of the year coupon, Jan 23, $500 off on the lifetime. Normally $14.95 brings you down to $9.95. Take advantage of it. It's good to the end of the year. Jan 23. It includes everything: the Rockbot code, the channel, the school of stock, where all the courses are on how to trade divergences, high probability setups, your swing trade alert systems, your tradeometer, everything. Everything is included. Everything is under the umbrella here. Sorry to bother you with that, but our members are great here. And not to mention our chat rooms, our forums, our whole membership area here. And the alerts, which I was just going to show you right now. I don't know if we can log in here. Of course I'm not. I'm DayTraderRockStar. I'm Eddie Murphy. All right, here's your dashboard, if you haven't seen this before. And for those people out there new or on trial or come in, a lot of people always ask, so how do you get to the chat? The chat is up in the upper right-hand corner here. All right. Chat is up in the upper right corner right here. That opens up the chat. Here's the news, the music channel, the tick strike, trade alerts. That's during the day, the trade alerts, and they also go into the chat room. But if you go up to alert manager here, excuse me, it opens up to this page, and it has all the alerts you could get sent to you. So the trade alerts, any active trade alerts that get sent out instantaneous, you put in your email, go to it. The HPS alerts are the swing trade alerts. When we have the HPS watch list, a stock on that, then that gets sent out if it gets triggered. The 5-minute alerts are these new alerts that we're putting out, which are 5-minute ES divergence alerts. Now, I've been trying to test. It's kind of in a beta stage here, and I haven't really been adding to it, but you could get these separately. The announcements, and then this is the good part. These are the text messages. You might be on the run, you might be on the move, and you get a text message that you get there's nice trades. So the trades alerts, the 5-minute alerts, you get them all text message. Put in your phone number, pull down your carrier, test it. It works great. It absolutely is fantastic. Instantaneous. By the time I push the button, I hear it already coming through people's phones. So that's how I just wanted to show you that, because people always asking about that. All right, so we're talking about the Pally. I want to talk about just a couple stocks for next week, and we think that the market here could aggressively pop here next Tuesday. Monday we're off, and that will finish off the Tuesday and Wednesday. I believe we'll finish off the Santa Claus rally. And I expect that to maybe one of those days, or maybe both of them. Maybe we get that rally. It's going to be tough. I mean, we're not guessing here. We know what we're doing during the day to make money, and I think that's easy enough. This market, trying to guess how far it goes up or how far it goes down, it's I think you're gonna, it's gonna take everyone out. So look at the chop that's going on. Just we're right in the middle of our 41.28 target, and then our previous lows 34.84, kind of in the middle. You see all these lines? I mean, it's a big scrabble mess here, but each one of these lines represent different time frames and alerts and stuff. Gap areas. See this consolidation. So going into next week, I would definitely just kind of hold on to this range here. It goes out pretty much to the 22nd, 23rd. This tight range. You would expect next week, do we get a breakout to the upside, or do we get a breakdown to the downside? And that's what we're looking for. The one thing I did also mention, that the VIX is not really participating yet. And I don't know if I mentioned anything about the traditional signs of a capitulation, having a spike in the VIX. It sure does not look like that's coming anytime soon. and it just maybe it's just not going to happen anymore. I'm a believer that old school indicators don't always have to be written in stone. The markets change, and the VIX here seems to be a little bit broken. Here was the pandemic lows, and look at what happened to the VIX. And then we had some other pops, and these kind of represented market bottoms when we had those spikes up to about 40. And I think a lot of people are out there saying, you know what, we'd like to see the VIX pop to 40, kind of confirm maybe a bottom you put in, and it's nowhere near there. And what's going to cause that? There's no fear. Now, the other thing is recession talk. I would think most people think we're in a recession right now. There's no way of really, I don't know. I mean, it's just so much out there still. Has the market priced it in? I mean, these are all questions that eventually be. But right now, we're in a very choppy phase right now. The VIX hasn't moved. If we capitulate down, will we get a pop in the VIX? The PE of the market, a lot of people focused on the PE of the overall market. It says we need to be down another 2 points. Down that 15, 16 range. I think we're currently at 17 forward PE on the S&P. So I don't know how long that. I mean, what would take that couple points off of the PE? How far does that come down in the markets? Can we do that math? The other thing, before I leave you off, I'm looking for a bottom in this market. Any type of big divergence that might happen, and that could be happening here. I want to show you one thing, but then we're going to just go over some of the divergences that happen. I do a divergence scan throughout the market, the S&P 500 being the biggest, kind of more the best of breed type of thing that we watch. These good quality names, 500, nice cross section. So I do look for the divergences in that, and when we see a good supply divergences popping up, then we tend to see the market here put a bottom in, and that's a good overall indicator. It's kind of a sneaky indicator because now people are looking at how many there are, but they all tend to work together with the markets, especially if you have an index weighted stock or So here's a couple here. We'll just kind of look at fast teasers. Showing up as a divergence here at 42.25. Again, nice pullback. LUV, looked at it today. I think that's a buy down here. All the problems they had, it really sold off. They're back to 2020 pandemic low levels, all the airlines. Paramount Global, I circled it today because we like it here. Intel, very cheap, but showing up as an oversold level, starting to turn back up. Big blue. Oh, that's IBM. Marriott. Delta Airlines, all the airlines here are setting up as divergences. Delta, you can see the 9.3 on the top there, starting to turn up. MGM Resorts, so a lot of travel stocks. QVRO, Qualcomm. Apple here showing up as a divergence. I mean, this is big. Look at the last divergence here. The last one here in September really didn't do much. We had a little pop and a little chop, and then we dropped off. And here we had a little bit of pop, and then we dropped off. Here we have another divergence starting to form. I mean, we're also kind of coiled up, which we don't see too often in Apple. Apple doesn't usually go flat line here. So this is another HPS setup. When we talk about HPS, we have the divergence setup. We have a triple rotation setup. We have a coiled stochastic channel breakout setup. Those are some of the better HPS things. And again, these are all in the course, the School of Stock course. This is usually a very bullish pattern for a stock like Apple. So pay attention to Apple going into next week. This is some bullish stuff. And I would also pay attention to this if for whatever reason this market kind of dropped down just a little bit more. Just not a lot. Just the market, kind of like this is the scenario I wouldn't mind seeing. Especially here, because a lot of these are ready to pop. But market here, a lot of negativity out there. Market, Santa Claus rally, whatever happens Tuesday, Monday, and then it rolls over. And we kind of people like saying, "Oh, here it goes. We're starting to break down." But we only break down fast and then reverse, causing everything to kind of capitulate to new lows, but not the market not taking out the lows, but these stocks will be putting some decent lows, and these are the stocks that are going to help the market. I mean, Apple down here is starting to look attractive. Does it go further? Possibly. I do like the coil on Apple here, and especially on the 9.3 here. That's just showing up right now for the first time. Just noticing that. Glad to put it on it. We'll have to revisit that. Texas Instruments. A lot of quality names here showing up also. American Airlines, Alaska Airlines, Regeneron Pharmaceutical, Google. I mean, I would buy Google on a breakdown. I have Google already. I got it pre-split. I'm at 4 shares now. They're whatever. Google showing up here. Disney. You know, you gotta like Disney down here, but is there a capitulation type of bottom here? One more breakdown of all these stocks. One more breakdown would do that. I'm looking at this potential breakdown in Disney. If it did come down here, you want to have some cash available. This looks a little, again, a little lift here. We'll see what happens Tuesday and Wednesday. It's going to be very interesting. If we kind of run out of that Santa Claus rally, it doesn't give us anything. I could see these things just dumping out a little bit further. Maybe in the high 70s, easy on the high 70s on Disney, just to get us down to that lower trend line. Get down to that lower trend line, we put in any type of 60 daily divergences, you got to be all over that. So there's good things coming. Well, I'm going to leave it at that. I was kind of got off track. Gave you a couple stocks that we're just overviewing right now. Short term is the nature of the game here, and that's where the money's being made. So again, be here early, 7:30 if you want to take part of that, or you get the alerts either way as a member of Day Trading Radio. We'll see you in the market. So we'll be there Tuesday morning, and I'm going to put out a couple other videos. One, I'm going to do a market radar talking about the conditions and the targets that we're looking for. Next 2 targets to the upside and to the downside. I'm going to clean out my chart. That'll be the next video. And then we're going to do a watch list video for members going into next week, the stocks that we're looking to trade. Have a great evening, everyone. Happy New Year. And, don't forget, end of the year sale, coupon code JEN23. Happy New Year. Happy and healthy New Year.